Welcome back to the channel, everyone, and thank you for tuning in to another video. This is going to be a quick segment because I want to talk more so about market structure and about supply and demand. All right, it's imperative that you understand about market structure and being able to follow and read the market as well as follow price action. There are a lot of people I'm noticing that are struggling with understanding, which way to really trade. Okay. But it's all depicted upon what the market has done and what it's looking like it's going to do. So today I noticed that over on the Discord community, for instance, we had some traders that were interested in taking a trade short right here on this pullback to around the 77, 76, 77, 78 area. And I couldn't quite understand that right here where this ellipse is right here, because first of all, you're trading from a lower time frame. And it's imperative to take a look at your higher time frame to understand where the market is currently at, meaning what's below you and what's above you. Okay, if you have support right below you, let's say for instance where the market is moving to the upside, you got bullish candles and it's bullish activity. Why would you be taking a trade going short right at the cusp or the latter end where the market started shifting to the upside? You are now selling into support. Again, you are now selling into a support area. So like I always talk about as well, do not try to trade in the middle of something. It's wait for the break of structures. That's your clear sign of really what to do, what type of trades to look for. So let's take a look at the higher time frame first. I just want to kind of give a rundown on this right quick. Here we go. This is the higher time frame right here on the ES futures. Okay, the market was making higher highs and higher lows, right? And then it turns, it topples right here and starts breaking structure to the downside. Okay, we got it made a push down here. Okay, pull back, and then it breaks below this area here at 43.74. Okay, so we got a break of structure there, right? And the market runs to the downside. This area right here, this is an area of supply on the higher time frame that you can look for the entry for. Okay, meaning going short. All right. So we got a high, price folds down or moves lower, breaking structure. You want to be looking for your short entry back at the area of supply. Okay. Look at your higher time frame. It's imperative to kind of give, to look which way you should be trading. Okay. This stuff is really not that hard if you just pay close attention. You can't just stay narrow-minded or focused on what's going on the lower time frame. Yes, I do it from time to time, but I'm looking at, even if I do not wait for I say this all the time, a demand or supply area on my higher time frame, and I'm trading, on my lower time frame, even from counter trend trading, whatever the case is. I tell you what I'm always doing. I'm always looking at my higher time frame to make sure that we're not butting up against a major area of support or resistance, okay? And if you took a trade, when at the price rejected this supply area right here off the higher time frame and pushed down, and then it came back up around the 77, 76, right below you support. It was already bullish activity to the upside here. So why would you want to be taking a trade against the tidal wave? Okay, you don't want to fight that. You don't want to fight the force of the market making bullish activity with force to the upside, and then trying to, right here when close gets to the bottom end right here where the activity starts to the upside. Why would you want to be going short into that? You're shorting into support. Please do not do that. Look at your higher time frame. I know a lot of guys, you individuals out there, I say guys, I mean women and men, just traders in general, are frustrated, maybe getting to, because you don't understand market structure, okay? Or you don't understand something about price action because you're not paying attention to the higher time frame, okay? If you spend some time and zoom in or just take 2 seconds to look at the higher time frame to make sure that you're not shorting an area right here into support, okay? Or you're not going long at an area of resistance. You do not want to be doing that. You cannot fight that. All right. There's just too much force coming out of there, especially on the higher time frame. A big green bullish candle on a higher time frame, 60 range here. Another big green bullish candle. We do tap into supply right here, but immediately right below us is support. Okay. There was a lot of buying activity that came out of this area. So look. The best opportunity to take this short would have been, let me show you on the lower time frame, once it tapped into the higher time frame supply, not demand, but supply. Let's take a look back here. All right. I'm going to talk about this ellipse area because a lot of you guys try to get into this trade right here at 77.70, at 77 area, somewhere in that area right there. And there was major area of support where aggressive buying took place to the upside if you looked at the higher time frame. So again, all you're doing is selling into an area of support. Do not do that on the higher time frame. The market was already moving higher. So this was the opportunity. This box right here, this purple line, this is the representation of the higher time frame supply area, okay? And what you could have taken a trade, okay, off the rejection, all right? Look at the higher time frame. I'm not saying trade the higher time frame rejection, but there was a supply zone on the higher time frame. When price tapped into that, you could have been looking at your lower time frame to at least take it back down here to this area right here, where, you know, towards the lows, okay? Because there was a little bit of room between 83 or 84 area back down here to say 70 or 71 area, okay? You look at the lower time frame, this was the best opportunity to get into the trade right here. This was the area right here where price tapped into the higher time frame supply. If you look at your lower time frame, there was price was already making lower lows and lower highs to the downside, and this right here was an untapped area of supply on the on the lower time frame. Wait for the rejection, on the lower time frame, and you can look for a short opportunity, okay? Because price was already making lower lows and lower highs with a pullback to a key area just as well on the lower time frame supply area, okay? It was pulling back to supply right here on both the higher time frame and the lower time frame, okay? So you can look for the area of rejection, okay? Now, right here it came up here, and it didn't fully tap into the zone until it pushed down and then returned back to it. It tapped right into it. It wicked away from it. If you're aggressive, you could have got in there, or you could have waited for the break of the candle, taking it back down here to at least around the 75, maybe 74 area, maybe a little lower. You could have held on to it, okay? But if you did this right here, this was the area to take the trade from, right here at 86, 86 and a half. If you missed that, then you were a no-go because price tapped into the higher time frame demand, okay? Price tapped into the lower time frame demand, multiple confirmation there. Why would you be wanting to take short an area again when price has already proved to itself? Look what it did on the higher time frame. It proved to itself it rejected right there when it tapped into both two means of confluence on two charts. Supply on the higher time frame, supply on the lower time frame. Taps into it, boom, comes back down here, hits the low. Why is it bouncing when it gets here? Because there's bullish activity. There's momentum to the upside here. So once it comes back to this area, it's going to more than likely be looking for continuations to go long. So why would you be going to want to go short again into support after it's tested support already once it rejected this area here? It rejected the zone, pushed down to support, and blasted to the upside because there was bullish activity below. Again, it rejected the higher time frame and the lower time frame supply, hit support, and takes off to the upside. I noticed that some of you guys if you missed this, you saw the market moving down, okay, pulling back, pushing lower. This looked like a break of structure to you. It was. But if you took this trade right here, okay, then you are selling right into support because right below it, you're trying to sell at 77 or 76 area at the price had already tested support into a bullish mode of moving higher. And then what does it do? It continues moving to the upside because once it rejects this area, it comes down to like 73 and it's already tapping support again. It had already tapped support for the first time. It's and there's bullish momentum to the upside. Guys, you got to know when to get into a trade. And if you miss that opportunity, you better not take that trade again because the market will it's going to hand you it's going to give you a losing trade. I'll put it like that, okay? It's definitely, you're going to lose, okay? Look for the prime opportunity to take. Use multiple means of confluence. Higher time frame supply confluence. Lower time frame supply confluence. I'm going to take this trade to go short when I get the rejection. Not, again, after it's hit support and trying to take a trade back into support again. That doesn't make any sense. You guys got to start thinking a little bit logical. Those that took this trade right here, no, that's bad. You got to think through things and be able to see this. And if you can't see what's going on, you need to stop. Okay, I'm not telling you to stop practicing, but I'm telling you need to stop and learn market structure or price action because there's something that you're actually missing. Okay, you cannot be so narrow-minded focused where you're just looking at what am I trying to say here? The lower time frame. Okay, you can't just be tunnel vision on what's going on in the lower time frame. You got to also see and understand what's taking place on the higher time frame. If support is right below us, after it is moved away from an area of supply and support's right there, why would I be taking a trade going back into support after it's bounced off support? That makes no sense at all. No sense at all. Okay, so, and plus, take a look here. This was a high. This was a low. Okay, all right. The best thing to do when looking for trades in between a leg right here, see this? High, low. This is the middle of this leg to the downside when price on the lower time frame started making structure to the downside or breaking structure to the downside. Okay. When it starts to run back up and starts to break these swings or this area of structure back to the upside, look for pullbacks to go long, not short into support. I don't know what more to say or how to stress it, guys. I mean, you guys are confusing yourself, and I think in a sense, because you don't understand market structure or price action. For those that are really trying to trade, thinking that this is an area of supply to really trade from, I mean, this is the fake out tactics that the banks and institutions are going to set you up for. All right, because they know people are going to try to take a trade right here. Oh, we're going to move it lower and take out this area right here and bring it back. And if you're not looking at your higher time frame, you're not going to know what's right below you. Support. If you're just looking at your lower time frame, you see that price can run down here. But if you look at your higher time frame, again, look at this area right here where I have the 73 or 72 marked at. Okay, I don't have it marked, but in this area here, once it rejected this small little area here, it just bounced from that area there. Take a look. Higher time frame. It's the same area. Price hits support, bounce. Now you're trying to take a trade back in. You're trying to go short right back here to this area of support, and price is already there. It has already tested it. Okay, you cannot continue trying to sell into support when it's showing you clearly that it's got these two big bullish candles on the higher time frame and it wants to push higher. You got to understand momentum and understand what's going to take place. If you try to take a trade against that force there, it's going to stop you out. Okay, because it's trying to go higher. See that, understand that. Look at your higher time frame. Put them side by side, higher time frame, lower time frame. Okay, trade multiple means of chart confluence. Okay, if you're someone that's starting off, you're a new trader, please understand this concept. All right, use both charts. Okay, use your higher time frame to tell you or let you know what you should be doing, the direction you should be trading. Okay, even though we got the breaker structure to the downside here. Okay, all right, price tap into supply. You could have taken a short on the first tap into supply. Okay, just right back down because support was right below. Okay, if you try to go short again into support, the market was already trying to push to the upside. It was already trying to push to the upside from here when it tapped into supply. You took a short when it the first tap into supply. Moving down here, guess what? It's at support right now, and it's wanting to go higher. So pay attention to that. Okay, you can't just keep taking trades into support when it's tapping off support to go higher, guys. I know I'm reiterating that, but I'm trying my best to get you to understand this. And I've been there. I've done it. I know the frustration and what you may be going through. But until you understand fully how to read the market, you're going to keep making mistakes like that. I promise you, you got to see things from the higher standpoint perspective and use both your charts when it comes to confluence to look for trades. If I was looking at this point here and I saw that the market was running lower off the higher time frame, okay, and I saw again the supply area right here, I'm going to look at my lower time frame to see if I can get into a short going, an opportunity off a supply area, multiple means of chart confluence to go short. Now, when I want to start looking for longs, it's going to be when on my lower time frame, when the market starts breaking structure to the upside, okay? But if you look at the higher time frame, okay, it really didn't start breaking structure to the upside quite yet. Then it started moving higher right here, right? Okay. So, but again, there's still opportunity to take trades going long, but even on the lower time frame, but you got to wait for the clear breaks of structures, guys. Breaks of structures here, breaker structure here. I mean, heck, there was a breaker structure right here in this area. Let's see, right here and right here. So you could have actually went long. Market broke up here, okay? Pulls back, okay? Broke structure right here in this area. Look what it did when it came down here to this area of demand right here. Broke to the upside. Okay. Broke structure right here. Okay. Right here above, let's see here, at 76. Right here, this was a demand area, a small demand area here as well on the lower time frame, okay? But the best thing you need to really do if you're struggling with market structure and you're just taking every supply and demand, what appears to be every supply and demand area, you need to use your higher time frame to see what's below and what's above you if you're looking to trade. This is supply off the major chart, the higher time frame. So I'm going to be looking for take a supply setup on my lower time frame. That's going to be your best means of confirmation if you're struggling, okay? All right, look at the higher time frame, find an area of supply. Look at the lower time frame, find an area of supply, take your trade, okay? Wait for the rejection to take a trade. If the market is moving higher and it's pulling back to a key area of demand on the higher time frame, look for a demand setup on the lower time frame as well. Stop trying to take counter trend trades against the market, okay? When the market is really showing his hand and trying to move higher, okay? All right. So, until you can perfect really how to read the market and become consistent and become profitable, please do not try to counter trend trade against the market. It is going to burn you. I promise you. If you continue doing that, and all you're going to do is continuously getting yourself in a situation to where you're stressed, you're frustrated, and you're going to be sending out multiple questions trying to figure out what you're doing wrong all the time. Okay. When it's clearly you're not understanding what you're looking at, all right? You're not understanding because you're not using the higher time frame to really tell you what the market is really trying to do, okay? Please do yourself that favor. I'm not saying I'm venting, but I'm trying to paint a picture for you guys to see, all right? I always talk about confluence and confirmation all the time. Yes, I know not every one of my trades that I take, that it may be, you may not understand it, but if you go back to the core and what I talk about multiple time frame confluence, confirmations of multiple time frames, those that are on the Discord community, lots of them, they understand that. They look for the higher time frame in the supply or demand zone, and they look for the setup off the lower time frame. If it says a demand area they're looking for on the price taps 2 on the higher time frame, they're looking for a demand setup on the lower time frame. If it's a supply setup on the higher time frame, they're looking for a supply setup on the lower time frame. Wait for the market to tap into those higher time frame zones and look for opportunities to trade in that same direction when the market taps into that zone. Stop trying to take the trades directly off the lower time frame at every supply and demand area, because unless you're looking at your higher time frame, it may burn you. Okay, I'm gonna leave it like that. If you're interested in joining the Discord community, guys, I'm just trying to tap into. If you're a first-time viewer, I'm trying to reach the masses or the minds of those individuals out there that are part of the community. And I think a lot of traders they struggle with market structure. Okay, I've been there. I know what it's like. Okay, I've been there. When I first started off, I'll talk about the first 2 years of my trading, that market structure was something I struggled with because I didn't know. I was taking trades on pullbacks to every key area, which seemed nice to me. Okay, or seemed like a correct setup, and I was losing some and winning some. It wasn't until I actually fully understood market structure as a whole and was able to read what the market was doing on the higher time frame, and then taking my trades in the direction of the higher time frame with my lower time frame chart, that I was profitable. And that's when I knew I was reading structure correctly. Okay, and you got to get to that point. All right, you got to follow price action too. That's key. That is so key. All right. So anyways, if you're interested in joining the Discord community, find the link down in the description portion of the video. If you haven't subscribed to the channel, guys, please take the time to go ahead and sub to the channel. Make sure to turn on all your post notifications as well, and do me the biggest favor, drop a like on the video. Okay, I'm trying my hardest, guys. I'm pushing out this content back to back. And I wanted to clear the airwaves today because a few individuals took this trade setup, and I could not understand it for the life of me why they took that trade. All right, at all. I really didn't understand that when support off the higher time frame was right below, and the market was already trying to push to the upside. Goodbye, guys.